Hi everyone, I'm Ken from CryptoTradingKS and the CTKS method. If you're new, a very warm welcome and welcome back CTKS family. What we're going to talk about today is intercorrelation and interconnection. Specifically, I want to address how important it is to overlay Bitcoin on your charts. We need to know if markets are strengthening or weakening, and Bitcoin tells us exactly how. Right across entire global markets, look at this overlay. The blue line is Bitcoin. We see it all the time. Now, you may read news articles that says Bitcoin is not correlated to the stock market. Traditional correlation and the correlation I talk about are different. You're going to learn some really cool things in this video. Let's get into it. In yesterday's video, we talked about the power of 2% trades. They're incredible. And many thanks to everybody who commented. 2%, 1 to 2% is an incredible thing. It will grow your accounts. As Sanjeev said, he's seen massive growth over time in his trading account because when those 1.5 to 2% trades compound, they create incredible growth. And as Dinesh said, 1 to 2% trades are a good habit to master. When looking at Bitcoin, we can see Bitcoin compared to the major market indexes such as the S&P 500, the Nasdaq, the Russell, the Dow, also the DAX, the Nikkei, the ASX and the Hang Seng. That blue line, which is Bitcoin, is directionally overlaid with these charts. You realistically can't unsee it. Bitcoin and the main markets follow each other. Now, what does this mean? If Bitcoin is breaking to the upside, we would anticipate risk on, which means higher prices. If Bitcoin is breaking to the downside, we would anticipate the major market indexes are retracing or are about to. Now, what does this matter? A lot of people don't invest in a major market index. They will invest in a stock. For example, if it's the ASX 200, those inside the Aussie market would trade in primarily different stocks, such as these ones listed here. These stock investors don't understand the role Bitcoin plays at sniffing out risk-on or risk-off activity inside global financial markets, not just across the Aussie market, not just across the US market, but across the European markets and the Asian markets as well. Bitcoin is a superpower when it comes to detecting risk-on or risk-off activity. If you're not looking at Bitcoin, you are losing money. Our community focuses on stacking probabilities and turning over small percentages. They can be very, very profitable. Small percentages can add up to 100x plus gains. Unfortunately, the level of financial literacy is exceptionally low. This is why a lot of people don't understand the rule that small percentages can create enormous gains. I spoke about this in yesterday's video. Now, when looking at Bitcoin, how do we detect how the ASX might go, the Aussie market may go in the next trading session? Well, we need to look at the structural levels on Bitcoin. Now, how do we look at structure? We basically mark up all of price history according to level 1 and level 2 standards. That's all captured inside this indicator that we put out each month. If you would like it, just go across to ctksmethod.org and you can pick it up. Now, what are we seeing right here and now? There's a structural support level at 104, around that 760 mark. Also, up higher, there's structural resistance at 108. 895, and there are a variety of levels just down here all the way down to around the 100 and 895 level, so 100,800. This is of course in USD. Now, what we're seeing right now at the current time is Bitcoin has got over that 104,600 and is potentially going to seek to push up to the 108,800 level. This is on the cards because there's an absence of overhead structural resistance until we get up here. Now, what happens if the markets weaken, and why might Why may the markets weaken? That's always the important question to ask. And how could we figure out if the markets are weakening before other people figure it out? That's the process of stacking probabilities. But we do know this, we've got structural support around that 104,600 and lower levels of structural support. So if we fail at the 104,600, there's lots and lots of levels that can capture price and rebound it. And yesterday we were talking about the potential of going higher, but we didn't actually follow through with that, but the structure caught it and rebounded it. We know the structure ahead of time, and always just please note, the price is always moving in a wave. A lot of people just think if it goes up, it must go up forever. And when it just reverses like this, it's a complete, well, people think it's a scam. How could it do that? It just needs to keep on going. Like this, it must keep on going. We know there's a specific rule. When you get a sharp angle, it does something or other. Please let me know in the comments. And thank you everybody for your comments yesterday. Just superb. Looking a little deeper on why Bitcoin goes up and down, and if it's either breaking out or breaking down. And we typically look at total crypto market cap in combination with Bitcoin. It throws a really incredible signal. I'm just going to push this across a little bit so you can see the structural levels. And of course, if you would like this indicator, it's available from ctksmethod.org. You can go and pick it up there. What we see right now, currently, is that total crypto market cap is getting above some levels of once structural resistance, potentially turning into structural support. Now, I say potentially because it's not a pre-drawn conclusion just yet. We need to get above this level, so it's a little bit early to call if this is a structural pass or a structural failure. But the good thing is there are levels of structural support beneath this price. So a worst case scenario, any retracement would come back to around this level. And looking at the comparative chart on Bitcoin, we have structural support at that level as well. So that's a pretty nice level to be involved with. So that's all really looking good. So we've got levels of structural support inside the entire crypto market. That's a good thing. And Bitcoin structural support where we need it most. Going back to total, we can see some levels of overhead structural resistance just playing through here around this specific level. If we overlay Bitcoin on this level, we can see that level is around 105,800. Now, what does this mean? Even if we get across this particular area of structure, we would anticipate around that 105,800 level to run into overhead structural resistance. Now, this is pretty intriguing for a lot of people because if you look at it, when we talk about that 105,800 level, what we're actually talking about is this area just there. So when we get above that area, the entire crypto market could put in a bit of a God candle, so you need to be aware of this. Now, what does that mean for local markets such as the ASX 200? For example, if Bitcoin manages to take out that 105,800 level, it's looking very good for risk on inside the Aussie market. And that, of course, will translate through to the Japanese market and the Chinese market as well. But the key is that we need to get above that level of total structure. And you note that there's not structure inside Bitcoin's chart. This is why you must read between charts. This is a great skill, and I share that inside the Profiting course. Now, we've seen a little bit of weakness in Bitcoin's price chart, and we know exactly where things need to get really, really interesting. If we get a upsurge in Bitcoin's price, that means it's bypassed the 105,800 level. It's a really good thing to be able to know what levels are important, but more so what levels actually capture support, and we know those levels in advance as well. Therefore, if we don't get above that 105,800 level, 104,800 is really, really important to hold. Now remember, these are not brick walls, they're gravitational areas. It can dip below, but it will be attracted to this area. Now we do note that we have a negative CTKS gap below that 104,800 structural level, down to the 103,200. This is likely if we lose the 104,800, we could be going down fast to the 103,200 level. A lot of people just say, "Oh Ken, I only wanted to go in my direction. After all, the markets are just like a job. Everybody's telling me I can get X dollars per day." Well, not without knowledge. It takes a lot of knowledge to get consistent returns out of the market. And you must be able to control your fear as well. The markets are not like a job, and that's the first thing to note. It's not like a regular paycheck. You must abandon notions like that. It is literally like running a business. When you look at this is like Saturday night for a restaurant. You're going to get a lot of customers in here when you hit that particular level, and they're all going to be buying. Unfortunately, so many people aren't taught how to be in business. They're taught to go to school, get a job, and just stay at one company or move around for the rest of their life until they retire. In the age of AI and robotics, that way of living is going to become extinct like the dinosaurs. It will be incredibly important for you to become or increase your financial literacy to as high a level as you can possibly increase it to. That means that you'll need to look between charts to read structure. You'll have to understand how the 10-year, the 2-year, the DXY, the dollar-yen combo, gold, silver all relate to what you're looking at, even if you're not trading or investing in any of them. This is called stacking probabilities, and it's really, really, really vital. For example, there's currently an inverse relationship between the US 10-year yield, the US 2-year yield, and Bitcoin. Now, what does this mean? When Bitcoin is doing this, we expect the US 10-year and the US 2-year to be doing this. If the 10-year and the 2-year start to come up, that will place negative associated momentum inside the crypto market, and you know what happens across financial markets when that occurs. What Bitcoin is doing is actually sniffing out risk on and risk off across the entire planet, across all financial markets. There's a few things to know about gold. When we look at gold, one thing that we understand as students of the CTKS method is that price moves in waves between structural support and structural resistance levels, and we can see where smart money is buying and selling way ahead of time. We don't have to just look at price action and say, there must be a resistance there. We know where the resistance is before price hits it. We also know where support is before price hits it as well. Now, that's a pretty bold statement, and this is why the CTKS method is literally the world's most powerful smart money buy and sell level detection system. A lot of people want to get really well off financially. They want to get rich. The one thing you need to know about the rich do not guess. They don't hope, they don't pray, they work their butts off. They understand how things work. And that's really important. You need to know how things work. Raising your financial literacy is not an optional thing anymore. It is vital. So when we look at gold, we know that we had structural support, quite a good level of structural support on gold, playing in through the 31.66 to the 31.88 mark. A positive CTKS gap up to 32.42 where it hit itself in the head and has been retracing. Now you may look at gold independently. You just look at gold and say, I don't know what caused this. Why did gold go up? It must be something to do with the news. Actually, not really. This has to do with gold sniffing out risk inside the market. We saw the VIX spike up and then decay. and gold and the VIX have been hanging out like brothers in arms. So please be aware, when gold spikes up, it means that risk off is coming into the system, and that means a retracement in the major indices as well as Bitcoin. We're stacking probabilities at the current time. So how many probabilities do you need to stack across? The way to stack probabilities is to understand what's called the CTKS cheat sheet. Now, the cheat sheet is about 7 rows of data. To understand what's happening with Bitcoin, and therefore to comprehend what's going on inside global markets, inside the stock market, inside the crypto market, and all over the place, we need to understand row 1 and row 2 first and foremost. The one that you need to keep your eye on is the VIX. A lot of people think that they need a lot of money to get into trading and investing. You don't. You need a lot of knowledge. People just immediately think, oh, if I get into the market, I'm going to make so much money. I don't want to trade because I'll pay tax. You're going to pay market taxes, and market taxes are called losses. A loss occurs when people buy and sell at the wrong times. If you don't know structure, you could be actually buying at overhead structural resistance and getting mystified why the price comes down. The major thing to understand is the VIX is driving the markets at the current time. If the VIX spikes up, we would expect risk off across the crypto market, across the stock market. You're literally looking stock market, crypto market. There's a lot of power to turn over small percentages in small amounts of time, and from the homepage, these are all YouTube videos that you can have a look at. Also, you can download the official ticker list, it's absolutely free, as well as the CTKS method cheat sheet. This gives you a structured way to fill out and track intercorrelation, interconnection, and structure. It is very, very valuable. And of course, when you understand that and you can trade between structural levels, you can make incredible returns. All the trades that I do are at spot. I don't use leverage. And they are some of the trades that I showed you just below this. This is from the homepage. If you want to be successful inside any field, choose learning and success will choose you. It doesn't matter what you're doing. If it's your job, learn as much as you can. If it's a sport, learn as much as you can. If you're putting money into the market, learn as much as you can. Financial literacy, if you're putting money into the market, is not optional. It is mandatory. And you will find the more you learn, the more you earn. The key is sitting inside the word itself. In the comments, please let me know what was the major learning that you had inside financial markets. And we have a very diverse community. Some people have been inside financial markets for decades and decades, other people just getting in. I'd love to hear your comments. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.